Good afternoon and welcome to another episode of the Financial Pro podcast. Today we are joined by a mortgage industry legend, and I hope you don't mind me calling you that, but he's been in the industry since 2006, set up one of the leading buy-to-let brokers in a niche environment, and then went through the rebrand of that into what is now the founder and chief executive of Dynamo. He's an author very, very recently, so we're going to talk a little bit about that today. Has a fantastic mortgage club that is out there in the industry as well. So welcome to the podcast, Ying Tan. How are you?
Thank you, Gary. Too kind, far too kind with your words, but I appreciate that. And yeah, very well, thank you. In the crazy times we're living in, trying to make the most and the best of some challenging circumstances. But yeah, all things considered, can't grumble, as they say.
Yeah, that's what it's all about, and it's just about having a positive mindset is probably one of the key things I think that I took away from your book as well from that point of view.
Yeah, I mean, I've for many years always championed the positive mindset. It's very easy to talk yourself into a depression, talk yourself into a recession, and you've always got to look at the glass as half full rather than half empty. And, that positive rubs up on your peers, and especially for us as leading figures within our industry and leaders of our businesses, it's down to us, like it is down to the Prime Minister to lead the country out of the challenge we have. It's down to us to lead our business out to bigger, brighter things that we can look forward to. So, yeah, positive mindset is everything. And I think for successful entrepreneurs, business people, but actually just any success in life, I think those with a positive mindset, those that don't look back and dwell, those that don't procrastinate too much, I think it can really help lead to achieving more goals and objectives as we live our life.
Yeah, you mentioned procrastination there. Actually, it wasn't something I was going to bring up, but I was listening to something this morning and they were talking about procrastination, and they used the gym as an analogy, and it's quite interesting because they said about when you procrastinate, you're basically telling yourself a lie. I won't go to the gym today and it won't hurt me. So it's the reframe that he was kind of talking about, was utilizing it, and just tell yourself an even bigger lie, in the sense of, if I didn't go to the gym today, I might die. It's still a lie, but at least it's a lie that pushes you in the right direction. That's quite interesting.
Yeah, no, absolutely.
Yeah,
and I'm sure we're all facing those challenges at this time of the year, January, all setting ourselves objectives and New Year's resolutions. So I'm sure we can all relate to that and procrastinating, whether we follow it through or not.
Definitely. I'm meant to be on a health kick this side of year. It's my little boy's third birthday today. Guess what's in it? Chocolate cake, and I'm like,
I know. My, like everyone, we're probably all like, okay, we need to lose some weight. Let's go on a carb-free diet, all that. And then yesterday, the good wife made some chocolate brownies with the kids, and yeah, that all out the window. We're not even halfway through the month, but hey, as long as I achieve and work towards some of the other objectives a little bit more aggressively, then can't complain so much.
Yeah, that works. So let's go on to your career and your journey. And it is a massive hero's journey as well. And I'll bring it in now because I think if you want the summary of the hero's journey, then it's great to get your hands on this, which is on Amazon. It's published by Wiley as well, which is a massive business publisher. So you need to make sure that you go over and grab a copy of the book, but some of the stories will come out in the conversation today. So kind of bring us before 2006, before you decided to get into financial services as an industry. What was going on with Ying? What was kind of the pre-financial services story, shall we say?
Yeah, well, I mean, I was kind of in financial services before I set the business up anyway, but in a slightly different vertical. But my background is investment banking. I worked at Deutsche Bank, UBS, Goldman Sachs. I was very proud of the fact that I was one of the youngest vice presidents of Goldman Sachs at 26. I had a great career there, earning very good salary. But I felt I was missing something. And during that time, unlike some of my peers, every time I got a bonus, come April, I would go and take that as a deposit to invest in buying houses. So my friends were spending on nice holidays, fancy cars, but I always viewed building a property portfolio as far better use of my money. So I built quite a large property portfolio during that time. And as I built the property portfolio, I started, getting exposed to mortgage brokers, et cetera, et cetera. And I had a great time, but I quit investment banking in 2001 mainly because I was in New York during September, well, just the day before September 11th, and it allowed me to reflect on myself and say, is this what I want to do? I do want to chase my dream to be an entrepreneur and be more full-time into property. So that's what I did. Having come so close to such a horrible disaster that was at September 11th, it allowed me to reflect on myself, and I decided to travel the world, and I came back and I went full-time being a landlord. I expanded my property portfolio quite aggressively at that time. And the real challenge was me. I was going to my mortgage broker at the time, telling them what to do, when to do, and how to do it. And I thought, blimey, if this is the best the mortgage world can offer me, then maybe I should do it myself. And actually, I want to set up a niche specific to buy to let, because the brokers, at least I was dealing with, didn't seem to have that expertise. And I felt it was important on such an important area that they built that expertise up, so I could get the right advice to help me build my property portfolio. And that's really where the buy-to-let business, as it was called then, came about in 2006. But, prior to that, I was, just a man with big dreams that I enjoyed life. I had a really good social crowd, like everyone, and went out a lot in London. But, for me, when 2006 came, I was, 30 odd years old, and it was time to settle down, build a business, and really identify with my why. And my why was that my parents had worked very hard, sacrificed a lot in their journey to be in the UK. I wanted to create something so my children didn't have to work as hard per se, or work so hard to get things, but still teach them the value of life and the importance of earning and working for everything you do. It's important that you identify your why, and that was my why, and I've never looked back since.
And you've maintained the same why, I would assume, all the way through from that 2006, or has that kind of pivoted and changed as you've grown as a person and the kids have grown up?
Yeah, it's definitely pivoted. I guess my why was, initially because of the sacrifices my parents gave, over the years. I think I'd mentioned, certainly in the book, documents about my dad, hitchhiking, around the world, from Malaysia to the UK in 4 months with £20 in his pocket. That's an immense story. And if that doesn't give you the drive and hunger and motivation to be successful, then not much else will. And I guess as I've got older and the kids have got older, then it's been more about my own family. I'm a father of 5 children. My oldest is 16 years old now, and the youngest, 2 twin girls. Be careful what you wish for. Three older boys, wanted a girl. Got 2 for the price of 1, but absolute bundles of joy. 18 months year old now, I love them to bits and love the whole kids to bits, and I want to provide for them and give them everything that they can. But at the same time, they have to understand that nothing comes free, and they've got to work for it. And it's that getting that balance right, which is really hard in this world where kids seem to have everything right. Certainly not when I was a kid. We followed our parents around. Now I follow my kids around. So I think I'm the lost generation, which seems to be following everyone but himself. But there you go.
Yeah. So what was the going back onto the beginning of the journey, kind of in 2006? It was the becoming a landlord and experiencing poor mortgage brokering, realistically, that drove you to kind of set up your business, as it were. Yeah. Now, I get lots of people who reach out to me more often than not wanting, and the reason why I'm asking this question is because you've got a massive training suite within your business now, which obviously wasn't there way back when. But one of the questions I often get faced with, having come from investment banking, moving into mortgage brokering, you went from no industry experience into jumping into a new industry, new start.
Yeah.
That's obviously challenge number 1 from that perspective that I'm really interested in. But the second part that I'm interested in is that element of, would you do that again in today's mortgage world? Because I often get asked the question, I want to join the mortgage industry. Should I be an AR or should I be a DA? And I'm like, well, you haven't even done the job yet. It's you have to start with the end in mind, but at least get 2, 3, 4 years worth of experience and understand that this job is actually bloody hard in today.
Yes, absolutely. Yeah, really, really interesting take and interesting question. And you're right. When I set up, I did my CMAP off my own back, but most people will trade as a mortgage advisor for a number of years, under a bigger firm, before they then branch out themselves. That makes logic and makes absolute sense. Excuse me. I think for myself, I had no experience of being a mortgage brokerage, but at the same time, being a qualified accountant, being a landlord that arranged multiple mortgages on the other side, I felt quite confident that I could do the role, and it actually gave me the opportunity to have a clean slate where I wasn't, you didn't have murky ideas of how it should be done or how it should be run, a business should be run in this world, and I took it from a completely clean slate, and that aided me for sure. And so having no experience in mortgages and becoming a mortgage broker wasn't daunting for me, and I would do it every time. I'm not a man that likes to look back and regret. So, if I was coming into this world now, I have no regrets going in the mortgage industry. I've built a wonderful business from ground up, from, me, myself and I to a business that, turns over well in excess of £12 million now. I must have done something right along the line, and I've had a wonderful journey. We work in a fantastic industry. We were DA. Gary, I chose the DA route as opposed to AR. There's no right or wrong answer, but the DA route was right for me at that time. And haven't looked back, and I'm not a person that looks back. And even if there are errors, I'm very much a believer that you've got to take those errors, take those life lessons, and use it to better yourself, rather than to think of how you could have done things differently and to regret things, because I don't think that does anyone any good. So in a nutshell, no experience, came into the industry, don't regret it, would still do it now. And I think anyone considering coming into mortgages, it's a great place to be, with tight-knit community. It's one of the places where, and I always say this to some of my team, that if you want to be successful and you want to control your own destiny, our industry, being a mortgage broker, consultant, you can do that because you reap what you sow. There are many industries and many jobs where you can work very, very hard, and you may not necessarily see the fruits of your labor. This is an industry and this is a job and a role where you get back what you put in. So I hope that answers some of the question.
Yeah, definitely. And you actually went self-employed around about the same time I did. But when the credit crunch hit, which we'll come to in a minute, when the credit crunch hit, I diversified and did insurance for 7 years. But when it was, mortgage brokering in 2006, you didn't have MMR. There wasn't, below 75% of a property's value and things like that. You didn't even need any paperwork. It was just no bank statements, no nothing at all. Whereas now you need the kitchen sink and the inside leg measurement and the underpants to get it through.
And the overpants.
Do you think if you were going self-employed today, or maybe to our audience who are thinking about joining the industry and going self-employed today, would you advise them to take your route of going no experience, get your CMAP, be an AR or DA, or try to be? Or would you say that actually mentorship and good training is just the foundation for a much stronger future?
100%. Training and mentorship is key. Without that, I didn't have that, but my success, and without doubt, some of it's going to be luck, some of it is a calculated risk and luck. But the majority, many won't be successful going into an industry that they've never worked in before to build what I have. I'm fortunate and I have other types of background which help me succeed. But if you're coming in for the first time, there's no doubt you need to get mentorship with people. I've mentored people in the property vertical, and some of them have gone on to be, world-renowned speakers and done really well. I'm very proud of that. But getting a good training program, and we at Dynamo are very proud that we've got a training program where people come to. It doesn't matter if you're a burger flipper from McDonald's or an MBA graduate from Harvard. The majority of the people who join our business, 95% of our staff, have come from outside the industry, and we take them in from, shelf stackers at Sainsbury's, cashiers at Marks and Spencer's, fried KFC chicken fries, whatever it might be. And for me, it's about the mindset. If you've got the right mindset, you've got the right attitude, you've got the drive and hunger, then, we as a business with the right mentorship, with the right training program, we can give you the skill set of learning what mortgage is about, because mortgage is not a particularly complex, it's not rocket science, it's not structured derivatives. With a bit of time spent in the books, we can all learn it. But what we can't teach, and what we'll never really be able to teach, is that hunger and desire, because that comes from within. And so as long as you bring that to the table, to the industry, and you get the right mentorship and you find the right firm that can give you the right training and development, then that is the route I would go. And if the self-employed is the route you go, then wonderful, good luck to you. But I think you need to get that grounding first to learn how to conduct the business the right way. Like you said, the compliance angle is so different now to 2006. It's, shocking. But it is still vitally important and important for the right right customer outcome.
Yeah, and it's all about driving the best customer outcome at the end of the day. And how can you have done that? It's that whole thing, I would talk about in my videos. If you've got a first-time buyer, a remortgage, a buy-to-let, a help to buy, shared ownership, bridging, development, commercial, that's 8 elements, which then you start factoring in 2 people. Then you've got self-employed, limited, sole trader, employed, bonuses, commissions, overtime. There's another 7 elements, and you could have you could have elements of all of that in one application. So it's like,
and then you look at the other side of 100 odd lenders to consider where to place it, the criteria, the intricacies of that criteria. It is a really tough, complex job now, and to get the best outcome, within and drive your targets, but stay within the rules of the FCA regulations. It's a challenging role to do, and you need the right guidance to get like you said, the right customer outcome, because ultimately that's what we want. And people shouldn't think of the right customer outcomes as this is something that the FCA want us to do. This is something the compliance want us to do. Of course, that's important, but actually it's the right thing to do, because the more customers that you can get and give the best advice for, they will keep coming back. And if you want to write more business, getting repeat business is far better than winning new business. The incremental cost of the second, third, or fourth time you do that is far better. So it's really vital to any of your listeners, Gary, which I'm sure that they're more than knowledgeable about, but it's to look after your customer, have a good client contact strategy, get referrals. These are so key into building a mortgage business, rather than just focusing on a new front door business, which is equally important, but you mustn't neglect your back book and mustn't neglect the ability to write repeat business with your customers.
Love that, Ying. Thank you very much indeed. So great insights, which I want to bring it back to your journey now from the point of view of 2006. So you've gone self-employed, you've set up the buy-to-let business. We've had a credit crunch in the middle of that, which I was doing adverse credit at the time. So literally my business disappeared overnight completely. But talk us through that journey of, starting it, going up to what is now a massive £12 million a year business, a multi-award winning business. And,
Yeah, well, I mean, 2006, I when I set the business up, it was February 2006. I was like, wow, that we couldn't push people away, that there was so much business to be done. And then 2008 came along, credit crunch. People were, queuing outside Northern Rock high street businesses. Lehman Brothers collapsed, and it was like, head in the hands type scenario. And for the buy-to-let, which is where our specialism was, we went from a £40 billion market to an £8 billion market overnight. And that's the kind of cliff edge fall, which, even though we've had a tough 12 months with the wider market, with COVID, we haven't seen that kind of level of fall, drop off in business. If anything, the stamp duty and various other things have meant that the market's still quite buoyant. But that was really, really challenging. And we'd grown really quick, or it felt like we grew really quick. We went from, me, myself and I, in a serviced office in Regis with no windows in Guildford, to a 30-man strong business, within 18 months. And it was like, oh my God, and it was more about running the business than actually writing the business then. And then the credit crunch hit, and we had to downsize, and we took some tough decisions. I guess we were fortunate enough that we were small enough to be quite fluid in our decision making, and therefore we had to do some necessary evil, make some redundancies. And we downsized from the 30 strong at the peak pre-credit crunch to, not too long after the credit crunch, to about 4 or 5 people. We relocated from Guildford to Camberley into a smaller office, and I brought a few of my long-established colleagues who happen to still be with us now. And it was very much crossroads. I brought my other directors out of the business because I didn't, not to get the violin out, but from 2008 to 2011, didn't pay myself a penny. I was lucky enough to have a large property portfolio where interest rates had gone from 5%, 6%, 7% to 0.5%, 1%. So most of them on standard variable. I'd like to say that was because of my genius intuition as a mortgage broker, or maybe it was a little bit of luck. I don't know. But nonetheless, I was lucky enough that my income was being able to be subsidized by a relatively large property portfolio and a standard variable rate, attached to a bank-based rate tracker. because otherwise I wouldn't have survived, because, you know, the mortgage industry was in a really dire place at the time. And like I said, didn't pay itself a penny. And I brought my other directors out, and I was at a crossroads. Do I continue, or do I pack up and you know, chase another dream? I stuck at it. And I think part of that was to keep my focus, keep my niche was buy to let. You know, it's very easy to kind of diversify too much. You know, of course, there was residential, there was second charges, there's commercial, but I felt, and it was right for me, that keeping that focus on the area I knew was important without being distracted. You know, the book is called Don't Push Too Many Trolleys. And that is pushing too many trolleys, in my opinion, when you're at your knees during a tougher climate, trying to do lots of different businesses, lots of different revenue opportunities. You know, you're not spending enough time in one area. And I chose to just focus on buy to let. It put me in good stead. I started building a really strong reputation within our industry. I grew as a person. The brand became known for what we were doing. And, you know, we kept going from there. And you know, we are where we are because of that perseverance, that tenacity, that single-minded vision that we had, you know, back in 2008 during the depth of the credit crunch.
Yeah, that's definitely an amazing story. And I imagine going from, you know, 30 to 5 would have been one hell of a challenge in itself. I know obviously lots of businesses had to make that decision in 2020 because of COVID, but that was a completely different ball game, where obviously your whole business and, like you say, billions of pounds worth of lending suddenly disappears because of the market change.
Yeah, I mean, we saw a bit of it in April, didn't we? But, you know, literally we were seeing mortgage offers pulled left, right and centre. We were seeing lenders, you know, well-established lenders, you know, Mortgage Express was the biggest buy-to-let lender at the time, part of the Bradford and Bingley Group, you know, closed shop overnight, you know, and, you know, there was lenders that, you know, we don't know about today. You know, most of our buy-to-let specialist lenders, you know, most of them have only come about since 2010, 2011. You know, a lot of them weren't around during the credit crunch. And it was really tough to seeing lenders drop like flies, getting phone calls from, you know, the sales directors of these various banks saying, you know, we're not lending anymore. And that's the big difference between now and then. You know, now there are still plenty of lenders, thankfully, that are wanting to lend money for our customers. But, you know, 10, 12 years ago, during the depth of the credit crunch, that was non-existent. And that's why so many people struggled and the market contracted like this. And lots of people tried to diversify. But, you know, it's a bit of a cliche, but that was the making of many of us. And in the same way, I think people will look back over the next 12 months and when we get through this and look at it as a turning point in the making of them as successful people. And my advice to all of your listeners and things is just keep working hard, keep believing in yourself. The market is good at the moment, we get it, but the likelihood it's going to be more challenging in the coming months as furlough maybe creeps back in and the stamp duty deadline comes to an end and government support comes to an end. And, you know, it's going to be really tough, but keep persevering, keep believing in yourself, because, you know, that single-minded mindset will get you through this.
Where does that single-minded mindset come from? Is it just this story of your dad? Is that kind of the main?
Yeah, I think that's a big driver, Gary. It is. You know, he had that same single-minded vision, you know, setting off, you know, as a 19, 20-year-old boy, halfway around the world with a backpack, 20 quid in his pocket. You know, he took a boat to Sri Lanka and then, you know, went over to India and literally walked all the way through there in the Middle East, through Europe and everything. Is, you know, fantastic stories along the way. But you know, and so that's, I guess, in my DNA somehow. But I think it's more than that. I think it's the willingness and wanting to succeed. I was very into my sport when I was young. You know, I was a captain of my football team, basketball team. You know, I was a badminton player, and I do believe sport is a big part to play in being successful in business. You know, those same winning mentality helps, and that same single-mindedness. You know, when I was playing, I wanted to be the top goal scorer. You know, I was a right winger, more of a traditional right winger. I couldn't quite do it like the boys now, where they go up and down and do the defending. I was just the attacker, didn't do the defending much, but, you know, I wanted to score the most goals, and that, you know, that was my drive. You know, I wanted to finish the season with the most number of goals, and, you know, I think a lot of my single-mindedness and my competitive streak comes from sport as much as my DNA from my dad. And, you know, when, you know, you see your parents struggle, they make those sacrifices. My mum and dad had 2 jobs. You know, they would work till, you know, 9 to 5, then they'll come back, quickly put food on the table. At 6 o'clock, they'd shoot off to do a factory job or a cleaning job, you know, so they could pay the mortgage when, you know, interest rates were 18%, you know, in the late 80s, early 90s. And I think as a young child growing up, you can't just look at that and go, oh, good, that's what they should do. You can't look at it and go, wow, they're working really hard. You don't fully appreciate it when you're young, of course, and you don't really appreciate it until you're older. But at that time, you're going, they're working so hard, and they're doing all of these things. Why are they doing it? They're doing it so they can put food on the table. They can, send me to university, get a good career, and give me the background. And for that, that gives you a sense of drive that you want to be successful, and to make sure that they know it's for good reason they made those sacrifices.
No, it's nowhere near as good as your kind of thing, as your story and your father's journey. You can't even comprehend. It's a percentage of what that was. But my when I was younger, my parents grew up. I'm the youngest of four, so my sister's 12 years older, and my brother and sister, my two brothers are 18 years older, roughly.
Right.
But in that same instance, when I was 6 years old, we moved from Yorkshire to Essex in the house that my parents are now in. And they basically went through 10 years of pure hard time. And I never noticed it during that period of time, but not realizing it. Dad, I was doing boot fairs and Northfield Market and things like that with Dad for ages before his business actually then picked back up, and he won B&Q and Homebase and MFI, and the snowball really picked off. But it's that whole thing you don't actually realize. But then when you reach the older age, when I kind of got to 25, 26 and thought, right, now I better stop messing around with my mates and, living with them, actually reflect and go, bloody hell, we didn't have holidays for 10 years. Actually doing a market and all of that is really hard graft. And it does give you a different kind of mindset view, because I always look back and think, and yours will obviously be another level to this, but you do look back and think, I can never kind of moan about the journey that I go on, because you just have to accept that you are where you are when you need to be. But actually that's what's kind of embedded in me, is doing all those things every weekend and hearing those stories and being part of that, which no doubt has rubbed off on you. As you say, it's become part of your DNA almost.
Yeah, no, you're spot on. You're spot on. And you're right. We don't appreciate those kids. And, you always hear your mum and your dad say, you'll know when you're older, you'll understand, you'll understand. We've all heard that before. And you do. I'm saying it to my own children, and I can see the same look that they're having at me. I had it with my parents as well. But you do. And that's the circle of life. We only get one shot of it here. And I am quite a deep person when it comes to things like that. And I reflect on things, and, we've got to make the most of our lives. We're a small speck in the universe. The universe is, what is it, 14 billion years old. If we're lucky, we'll make 100 years. That's just a small speck in a massive timeline that is called, the life of the universe. And we've got to make the most of what we do all we can, but make sure you don't just do work. You've got to get the right balance in your life. And I talk about that a lot in my book, and it's really important to make sure you understand your whys, but you also get the balance right. And, I do a spidergram, a professional 4 focuses for the professional world, 4 focuses for the personal world, because the two interlink. And, a lot of things you can't achieve in the personal world, go on holidays, send children to private school if that's your objective, or buy a new car if you don't have the drive and objective from your professional perspective. But it is important, I really want people should move away from that mentality that if you want to be a successful business person, you have to sacrifice your family, or if you want to be a family person, you can't have a successful career or build a business. It's Codswallop. You absolutely can. And in fact, I would say the two go hand in hand more than ever. And it's important you get that right balance. You learn how to switch off as well, because, that's a problem we all have as business owners and leaders. To switch off is not the easiest thing to do. So make sure you find time for yourself.
Yeah, you mentioned there, I think it's a great opening into that, because that's one of the things. I'm a big fan of building a business around your lifestyle. And I always say there's periods of time where you have to go through sacrifice to implement new systems, to recruit the new person, to, get yourself back on track when you're perhaps a little bit behind target. But it's always, like you say, with that deeper why, but also knowing that it's not forever, it's for a short period of time, because you've got to bring yourself back to kind of centered in the most, where it is that family lifestyle balance. But I've always said to my wife, start pulling me back and tell me when I'm doing too much, because otherwise we just keep running.
You just keep running. Yeah, I agree.
And almost they get kind of left behind. And I think that's where things go wrong. So in your journey of, 5 people, 2009 roughly, through to now, you've said 12 million. How many people have you got on the team? How have you managed to maintain that work-life balance, as some may call it?
Well, it's a lot harder in the early years. When you're starting out, you've always got to put that extra sacrifice. It doesn't matter whether you're the entrepreneur and a business leader or just a mortgage consultant starting out in mortgages. The first couple of years of your new career is always the toughest. I think now I've got a very good work-life balance. I make sure I bathe the kids at 5 o'clock. I do the school run when the schools are open when I can. And that's because I've built an amazing, strong, loyal, hardworking team around me. But I haven't just instantly got that, or haven't suddenly got it by paying big salaries. I've had to earn that respect. I've had to prove my loyalty to them, and vice versa. So, it's been tough to maintain it, but I think it's easier now having a well-established business that is, I don't want to come across too arrogant, but it's at the pinnacle of where it needs to be. We're multiple awarded, and we're one of the best in class at what we do. But it hasn't always been like that, and I think people rightly understand that you've got to make those initial sacrifices, that initial hard work and graft. But the key is knowing when you can start, reining that in a little bit. I'm blessed that I've got a very strong team that help maintain the high standards of the business, and without them, I couldn't be where I am today. And whilst I may be the face of it, and whilst I may be the front of all that we do, the reality is I have an amazing team behind me at a senior management level, as well as down to the grassroots level. And we've recruited lots of apprentices, and I think developing people from the ranks really helps foster that strength and togetherness of a business.
Yeah, it makes a big difference. My insurance brokerage, all of mine had no industry experience, and I did all the training back then. I haven't followed that route now, just because of the mortgage market that we interact in, self-employed business owners, complex buy-to-let investment strategies, etc. It just wouldn't be right for newbies. That being said, we're now getting to the stage where we'll probably follow a similar model. We're setting up an academy and stuff. But what made you kind of want to go down the route of all of your people? Well, actually, how many people are on your team? You haven't told us that bit yet.
Yeah, well, we now have circa 100 staff. To be fair, at its peak, it was probably pushing 130 to 150 staff. But we've had a bit of consolidation during the back of COVID, but also increase in efficiencies that we've done. But so we're over 100 staff. £12 million turnover business, so sizable. But the office we have is 12,500 square foot office in Camberley, which could hold up to 200 staff, and we're continuing to push towards that to max it out. Having said that, it is maxed out at the moment from a social distancing perspective, but hopefully those will relax a little bit over the coming months, and we can start pushing on again.
So the thing I've got there then, in terms of when you first started out, when you got back into it in 2009. You downsized, you're back to 5 people. Did you start with the end in mind? Have you always kind of knew that you would go to a £12 million business, 100 people, now wanting to push on to 12? Did you always have that vision and that goal in the journey that you've gone on?
Yes, I think some people are reluctant entrepreneurs and they fall on the success of their business. I'm very much a person with a clear vision. I've known exactly where I wanted to go, what I want to do with the business, and a number of staff I need to get there. So I'm a real planner, and that's how I like to kind of organize my work life and my personal life. But yeah, I would definitely say I haven't just fallen on creating a big mortgage beast. It's definitely been in the vision, and we're still very much on that journey to kind of expand, become even better at what we do, and continue to push the boundaries. So yeah, but everyone's different. I know many people equally, if not more successful than me, that have kind of fallen on it, and everyone is different, and I think the key thing is, doesn't matter which way you've done it, the one big thing we all have in common is when the opportunity arises, you grasp that opportunity. You firstly learn how to identify that opportunity, and then you grasp that opportunity, whether it's by planning or whether it's by luck. The one thing that's in common, we take the opportunity when it arises.
Yeah, and I'm a massive planner like you are. I love a spreadsheet. I like mapping out the numbers and all that kind of jazz. And you mentioned there, which is kind of dear to my heart, in the sense of, you said you mapped out what you wanted the business to look like, and I presume there was a financial angle to that in terms of what you wanted it to pay you, and then you knew how many staff that you needed in order to be able to achieve that number. Would that be a fair assumption?
Yeah, I think, most entrepreneurs, and I think there's a slight difference between a self-employed and an entrepreneur sometimes. Self-employed could be just doing for lifestyle, like you've mentioned, that they want to be able to just work 3 or 4 hours a day, walk the dog, and get that balance right. that was never what I intended to do. I wanted to build a business which, I could, get a large investor to invest in. The dream of IPOing on a stock exchange, of course, is still there and would be there for most investors. And when you set up a business, you have that exit strategy at some stage where, you can put your feet up and say, yeah, I've done something pretty special with that. So I have had that goal in mind. And that continues to be there, far from being a complete finished article yet, but we're constantly striving towards those goals.
Yeah, nice. No, it's really good. It's nice to hear as well, because it's just having that end in mind, as you say. It gives you a goal to work towards. And a coaching session I had very recently with somebody, the question that they asked was, when is the business finished in your mind? And it actually got me really thinking in terms of actually, because it's finished in your mind. It might not be finished in the eyes of everybody else who's in it, but when do you kind of say enough is enough? And I was like, oh, okay, yeah, it's not bad.
Yes, it's a really good question. And to be fair, enough is enough changes at lots of times. A lot of that's financial. Some people say, well, enough is enough. If my business becomes worth £1 million, then great. That's me. I'm not a greedy person. Others will say 10 million. But every business has a potential to be the next unicorn and be worth $1 billion. But how far do you want to take it?
Yeah.
So I think everyone has different thresholds, and I think those thresholds change at different times. 5 years ago when I was 40, I said, if the time is right, I'm quite happy to put my boots up at 45. But I'm 45 now, thinking I've still got so much more to give. Exactly. So you give another 5 years. So it's got to be, but you need to know when to call stop, especially if there's lots of sacrifices you're making, because you only live once, and you don't want to keep making those sacrifices. And I'm talking about spending time with your family and that type of thing. But if you've got a good work-life balance, you enjoy your job, why don't you, and why wouldn't you want to keep continuing? And it's very difficult to say when is that exit, because we don't always know what business might be worth, or whether someone wants to buy a business for that amount, or whether you want to hand over the reins to your son or daughter. So, it comes, whilst you've got a plan and you've got a rough guidance, you must be willing to have some deviance to that, and to adjust it as your life adjusts.
Yeah, most definitely. And in terms of kind of going back to your buy-to-let transition, the buy-to-let business, transitioning into Dynamo.
Yeah.
I talk a lot about a niche. It's one of the things that's worked fantastically well since I got back into the industry in 2016, from a marketing perspective, from a client attraction, from a, gaining knowledge in one particular area. What was the reason for wanting to transition out of the buy-to-let business into Dynamo, and what change have you seen since you made it? I know it's been a little while. You've been rebranded now.
Yeah, coming up to 2 years now. The logic was relatively clear. We almost became too successful for our own good within that arena. People couldn't see past the fact that we were much more than just a buy-to-let brokerage at that stage. They couldn't see past the fact that we were not just telephone based. And so, we started doing residential mortgages, second charges, commercial, life insurance, general insurance, the list goes on, like all good holistic mortgage brokers would do. But people couldn't give us more credit than just for buy-to-let sector. Equally, we built some fantastic tech. Our IT director's been with us almost from day one, and we built some fantastic tech, but we hadn't been shouting about it because that was kept internal to our business. We're still proud to this day. Our CRM system, which is also our sales system, our compliance system, and actually our sourcing system as well, is a system that is being built in-house. And not many brokerages can say that, because there's so many phenomenal, great softwares out now. But there wasn't 10 years ago, in my opinion. So that's the route we went. We said, look, I see what's on the market. Most of it's not great. So we're going to build our own. So we built our own, and that's gone well. And then I started thinking that, there was this tens of millions of pounds coming into our industry with fintech businesses, et cetera, et cetera. And I was looking at it and saying, we've got good tech, arguably better than others that are coming with so-called fintech type business. So we started pivoting a little bit to be far more fintech based, and we're still very much on that journey. But that is our objective. I do think that the industry at some stage will go to a world where the tech drives a lot more than we're currently seeing. I don't think that it will replace people. I don't think there will be robots and AI which will replace human beings. Far from it. Nothing can beat in our industry than the real human voice, giving that reassurance of what mortgage they want to take. But at the same time, I do think that the tech will help, and I often use the Iron Man analogy, make us humans faster, stronger, and more efficient. And rather than doing 5 applications a month, we should be doing 35 applications a month, or whatever it might be. But the only way you can do that is if tech, enables it to speed up the processes, so we avoid duplication, so we're not always on our keyboard typing things, and you can take pictures of things, and it can take that data and scrape it and inject it into our fact find, and then it goes all the way through the process of an API link going up to lender, all of those great things. It's very hard to do, and we've all tried, a lot of money being spent on it, and no one's yet cracked it. But I do think at some stage, we can send robots halfway around the solar system. I'm pretty sure we can help automate the process within a mortgage with the right level of commitment from all parties. So that going a little bit long-winded story, but it was a mixture of the tech side and wanting to move away from the buy-to-let kind of branding, which worked well for us, but we'd outgrown that. And we've been validated, and we're very proud that we won the Mortgage Strategy Best Mortgage Broker last year. And also we won a Tech and Innovation Award. So they're 2 massive endorsements of the rebranding, being quite scary at first because the buy-to-let business was a massive brand in its own right, but vindicates really that decision to rebrand, that we carried all the goodwill from the buy-to-let business, and nothing was lost there, but we've enhanced ourselves further by branching out into those other verticals. So yeah, happy with it's gone, how it's gone, and would certainly do it again.
Yeah, happy days. Yeah, it's a great journey and a great story, and I completely get why you've done it. We've been Active Mortgage since 2006, and we're just about to go through a big rebrand into Active Financial, because we're doing more than just mortgages now. We've got commercial insurance, we've got wills that we've added. So it's just the journey that you start embarking upon. You have to pivot and change, and there are these big decisions and big transitions that need to happen. But yeah, it's great to hear from somebody who's come out the other side and smashed it in the last couple of years as a result of doing it. So it's fantastic.
Yeah, it's a bold choice, Gary. But it's like I said, if you make a decision, follow it through. Don't procrastinate. Don't look back, and you make it work. I think there's nothing worse than making a decision a little bit kind of half-heartedly, and then maybe I shouldn't have done that. And you start doing that, and you'll create an environment where it won't be successful. You've made the decision. Don't look back. You've done it now. Look forward, and you will make it successful. And believe in what you've done, because there's a reason why you've rebranded it, and believe in that reason. And if you do that, you'll create the energy which is required to make it successful.
Yeah, and you mentioned kind of your fintech idea, where the market's going to go in the future, how it's going to be. I know we've got a lot of uncertainty in the market at the present time, but where do you think Dynamo is going to be in the next 12 months, 24 months, 36 months?
Yeah, well, I mean, there is a lot of uncertainty, and it is very difficult to know where we'll be. Even for us, we part of the Countrywide group. Countrywide invested in us a few years back, which was a great achievement for the business as well. And clearly Countrywide have been acquired by Connell, so that's a massive change. So there is a lot of uncertainty, not just in the wider economy, but within our kind of little bubble. But I think Dynamo will continue to go from strength to strength. We've had a bit of rebasing in the last 12 months, to make sure we've got the right team to continue to push ourselves forward. And I think all entrepreneurial businesses need that. You can't just keep growing upon growing, because if you are doing that, you're generally building on something which is not so stable. Sometimes you need to grow, you need to rebase, then grow, rebase, grow, rebase. The trajectory is that way, but sometimes it's a little bit like that, and that's important. Because I think if you're just growing in one direction, you're probably building on weak foundations. But I think we'll continue to build, but it won't be just on bums on seats and headcount. We'll focus on technology, because I think before you start putting bums on seats, you need to make sure everyone within your business is being as efficient as possible before you then get new bums on seats for them to be as efficient. Because if you do it the opposite way, you start to see slack, which is fine when the market's exploding, because you're going to be making profit. But as soon as the market takes a downturn, you'll find that that's where the challenges arrive. But next 2 or 3 years, we'll continue to see us Dynamo to be strong, to be an even stronger player than we are already. And we work very closely with lots of other businesses, because of our B2B side of Mortgage Club. We're not selfish, and we keep our ideas to ourselves. I'm being quite instrumental in helping many mortgages mortgage brokers out there to become successful, to have learned from our errors in the past, and to have learned from our story. And I'm very much passionate about helping other leaders like myself, maybe at a slightly earlier part of the journey, and helping them get to where I am, if that's their objective, or indeed whatever their objective is. And that's a big part of our mortgage club, where we want to assist other mortgage brokers to kind of maximize their opportunities in the marketplace.
Yeah, learn, develop, and grow, as it were, is the key thing, isn't it? And you mentioned something earlier, which nicely leads into there. You said earlier on about, running the business over actually writing the business. And in that transition, if you're seeing it in your mortgage club or with people that you're speaking to, there is a certain skill set, mindset, and like you say, objective and outcome and opportunity to transitioning from mortgage broker into business owner. What do you think are the core skills that actually help people to make that? Like one of my biggest one is you need to get a PA. You need to make that first route into employing, and then understanding that first element of delegation and focusing on what you're good at. But what do you really think is kind of the differentiator in that sense? Where do you see the transition from writing to running?
Yes, it's a great question. I think that is the $1 million question for many people. Many people are great mortgage brokers, but it doesn't make them necessarily a good business leader. And I think for me, I was lucky. I built a strong team. You mentioned the PA. I built a strong team around me that I could trust to write the business, so I could grow the business. And I think the skill set you need, to be a leader, you need to be transparent. You need to be, you need to lead by example. Even simple things like, and it kind of contradicts a little with delegation, but it's getting that balance right. When we moved offices in 2006 to an 80-man office to a 200-man office, I was there at the forefront with everyone else, carrying things and moving things and showing that, if I can do it, you can do it. And I think that's important to build a strong, loyal team. But at the same time, you can only do so much. I can't see it, without my team around me, I can't grow the business, and therefore you need to delegate. And that's difficult because a lot of people with a business mindset, we're all control freaks, and you don't like letting go. But you have to learn to let go, because ultimately, if you want the business to grow, if you want the business to be more recognized and grow beyond just you, yourself, and I in writing business, the only way it's going to do is by letting go, empowering people around you to do the business right, and trusting that, making sure you've passed that knowledge on so they can write business in the successful formula that you've done business, and then use that extra time that you've got because you're not writing business to do something that add value to grow the business. And I think that's the key to it, really.
What do you think are some of the key things that, like you say, add value to the business? And actually, what are the things that you focus on when it comes to growing the business?
Yeah, growing a business, our business grew very traditionally. And I say traditionally in that, in the days where, last 5 years, you watch Dragon's Den, there's lots of investment, lots of venture capital, millions of pounds are coming into our industry now, especially if you've got a tech angle. But we grew very organically. So we would only, if we made £1,000, I wouldn't be taking those £1,000 extra as dividends. I'd be taking that £1,000, and reinvesting and employing someone else on £1,000 a week so I could pay for them. And then that extra bum on the seat will enable us to write a bit more business. And then we'll probably make £1,500, and I'd use that money. And, that's growing organically, right? So you have to have that vision. You have to be able to have that confidence and ability, which not everyone has, to be able to invest in the business. And to keep the money going, there rather than, taking the money out as dividends, because we can see that short term, I could take that 1,500 quid out, or I could put that 1,500 quid into the business to grow it and make it £2,500. So it's having that belief, that vision, and that confidence in what you're doing to grow it in the right way and organically.
Yeah, and it's a safer journey, isn't it? And you mentioned the organic growth there. And previously you mentioned, obviously, Connells have been bought out by Countrywide now, and how much?
And vice versa.
Sorry, yeah, Countrywide. Yeah. How much do you think, since they bought into the business, how much has that detracted, or how much control do they have over that level of organic growth, or over you as the owner of the business? Or do they allow you the freedom to still continue to to do it the way you need to do it.
Very much, yeah. I mean, obviously, I won't go into the specifics of the deal, but I very much still have autonomy on the business, and they've been very supportive, and for sure they've given the added confidence. And when we made that big transition in 2016 to go to this big building from a smaller office, would I have had the confidence if it was me, myself, and I only at the end of the month that was responsible for that payroll? It would have been harder. So whilst they've had their detractors for sure, Countrywide has been a positive influence on our business, and it'd be interesting to see how it pans out now. Connells has taken ownership, but certainly, A, no regrets, and B, they've certainly helped. You get to a stage in a business which we were at in 2016, where you can keep growing it, but for you to burden the whole risk on yourself becomes a worry. So to be able to diversify and spread that, and to I guess almost the equivalent of releasing some equity or cashing out partially helps to kind of mitigate and diversify the risk whilst working with a business where there are lots of other opportunities to help grow your business further.
Yeah, it's a great partnership. I can get it. It's it's one of those things that not many people have done, and it's good to hear how it panned out. And like you say, you don't know the specifics of the deal, but you can still tell that you're vastly passionate about driving it forward in the next few years and seeing where it really goes. So
yeah, I think we're in a really exciting world at the moment, Gary, in terms of the mortgage industry. It is at that, in my opinion, crossroads and pivotal stage. I think all of us in the industry and all of your readers and listeners, you do need to take a look at your business, because I think the world in mortgages will be somewhat different in the next 3 to 5 years. How that looks like, a lot of it, who knows? I think the world in general, off the back of COVID, is going to look somewhat different. But as long as we have that drive, believe that togetherness, we work in a very close-knit community, sharing the knowledge, work with thought leaders in the industry to try and stay a step ahead, do lots of reading. It sounds all simple, basic stuff, but it's so important that we do that to keep evolving, because those that don't evolve will struggle, I think, longer term as the market moves forward.
Yeah, no, it's good to hear, and good to have that whole idea of wherever you are in your business journey, you've got to be forward thinking, and you've got to think what's coming next, and you've got to be planning for at least creating a lifestyle business that gives you the life that you want, rather than one that's if it's just you, then you've created yourself effectively another job.
Yes.
Which is not really what it's about. If you're going self-employed, for some of you that'll be absolutely fine, but it's really inspiring to hear what's taken you to 12 million. And the question just popped into my head: what does the 12 million pound Ying know that the 1 million pound Ying didn't?
What a question. What does the 12 million pound Ying know that the 1 million pound Ying didn't know? I think it's going to have to be something, along the lines of balance. And that's the first thing that comes in my mind, because I think as a 1 million pound Ying, you see nothing else but you want to continue to grow, that you want to be successful and to win at all costs, etc., etc. I think, and maybe that's because one is now 12, which is a much bigger number. You start to realize that that is important, but equally important is spending time with your loved ones. If the pandemic has shown anything, is that people, doesn't matter how fit and healthy you are, you can be affected quite adversely. I've got some horror stories of people I know, fit and healthy, relatively young, being pretty badly affected, and it just brings that whole perspective of how short life is. And there's no one, you can't take any of your possessions with you. You can't take that 12 into the coffin with you, and therefore use it, spend it, enjoy it. But most importantly, get that balance right, so you can spend time with the loved ones that you have. Because sometimes when you're on that curve to chase that dream, you can neglect that. And I tried not to do it, but I'm sure I probably did. And now I guess I'm at a position now where I can reflect a bit more, and I make sure that the family, which is so important, that's what's driven me, from my parents to my children to my wife. Make sure you spend times with the people you love, tell them you love them, and and enjoy what you do, because life is short.
Yeah, fantastic. And I'm not going to say any more on top of that in terms of ask you anything else or anything. I think that's a fantastic ending to what's been a really great podcast and a thoroughly enjoyable journey and conversation. The thing I want to just finalize with is you only recruit people in Camberley, right? Because they've got to come. You don't have external people that you train, or they have to come visit. If newbies want to basically reach out to you to join, because you mentioned that, they need to be able to be in your local area.
Well, yeah, I mean, we run an employed business, so majority of people are, well, in fact, all of the people are employed within a 25-mile radius of Camberley. So not necessarily in Camberley. We have people with far south. There's Southampton, and we have some that come from Epsom and Ashtead, all the way to kind of West London, Ealing, Hammersmith, that way. So we have quite a broad catchment area, but the majority, come in every day, obviously. But in the world of remote learning, and possibly something that we're focusing on this year, we may start, to explore, remote working, self-employed is a possibility as well. So, what I would say is that if anyone wants to get a career or looking to transition, it's not just the people, the burger flippers we look for. It is always nice to have someone with 2 or 3 years experience, but, everyone wants to reach out and we can have a conversation for sure.
Where's the best place for them to do that?
You can reach out to me on LinkedIn or drop me an email, ying.tan, at dynamo.co.uk, and I'll put you in touch with our HR team. But yeah, I'm pretty widely available on social media, so there should be a way you can reach out to me. Go out, and if you want to hear more about me and my story and hopefully be inspired, get out there, buy the book. That's it. Don't push too many trolleys, and you'll know more about me than I know about me after you read the book. And hopefully it'll give you some nuggets of inspiration to help you fulfill your dreams and be the best version of yourself. That book is not there to make you, this is your formula to be the next Ying Tan, to build a business like this. It's about, we're all different. What is it that you want to achieve? What are your skill sets? And how can you be the best version of yourself by learning from life's lessons? Because life will give you all the lessons you need.
Yeah, and you are where you are meant to be right now, because as you develop and grow, you reach through different boundaries and you reach different levels in your own personal development, which naturally hinders onto the business development as well thereafter. So Ying, it is the Financial Pro podcast. And Pro actually came about because for me, I was looking for something that focused around values. And it was very much a case of echoing a lot of what you've been saying today in terms of perseverance leads to results, which creates opportunity. And that's where the whole kind of pro idea came around, as well as professional. And what I want to really know from you is, it doesn't have to be an acronym, but what does pro mean to you?
Pro means to me that, somebody who, has pushed, worked hard, been tenacious to be at the top of their game and, to be that person that the go-to person in the sector or industry that they're in.
Yeah, awesome. The right winger who wants to score every single goal and finish the season top scorer.
That's right. If only I can keep, I relive it all the time in my mind, but the legs and are just not moving like they used to. But hey ho, maybe if anyone's listening out there, when we can organise a mortgage industry vets game, maybe, I don't know, over 40s, I'm up for that. But just don't take my position on the right wing, and don't expect me to do a Trent Alexander and run all the way back either.
Well, I'm 40 this year, so I might be.
There you go. You just make it.
I don't know if I'll go left wing. You might want to put me at left back.
Sounds good to me.
I'm probably fitter now than I was back then, to be fair. But hey, I think don't drink it. That's why. It's probably the main thing is not drinking. But
that's right. That helps a lot, to be fair.
Ying, thank you very much indeed for giving up this afternoon for you. It's been an absolute pleasure. Thoroughly enjoyed it. It's been a great episode that we'll be putting out. So just a massive thank you from me for sharing your wisdom, sharing your ideas, showing your passion, drive, and love and care for this industry as well, because it is a fantastic industry. I echo everything that you've said today, and it's been great. The beauty of this podcast for me is the great people it gets to connect me with, and we've seen each other online, and you're massively prevalent on LinkedIn, so you can see a lot of what Ying is about on there. I think you're in the Financial Pro community as well.
Yeah.
But yeah, it's been great to connect, and thanks for my copy of the book, and I'm sure we'll eventually get to fist bump at some point in the future.
Absolutely. And, thank you and well done to all you're doing. You do a phenomenal job raising the profile of the industry. And I think you probably can be proud of the achievements that you and your Financial Pro community doing. Keep flying the flag high, and God bless and have a great year.
Yeah, thanks, mate. You take care.